Brady, cut it out, buddy.
And we're live. We're live with me, my dog who's outside, Mike's cat who will be coming across the screen, and John's dog that is somewhere in his house. If we hear my dog, two dogs, excuse me. If we hear my dog, then something's gone terribly wrong because all of us learn how to open windows or doors, and then I'm doomed.
Yeah.
Welcome, Mike. Welcome, John. I'm excited about today's topic. There's a 100% chance that we're going to go deeper than I know how to actually properly host, because both you guys know more about crypto in the decision-making space there than I do, and it's going to be exciting. For folks who have not been familiar with Mr. Trisko here, Mike builds cryptocurrencies from scratch. I don't think I'm overstating that, right? You actually build cryptos from scratch.
Yes.
And for folks who are not familiar with John helped develop RSS and was an internet analyst back in the 80s. So we have two people who have the 90s, 70s. It's like last millennium. You were an internet analyst last millennium. So it was, a while ago. So we have a lot of deep expertise here. And Mike, some of the questions we've been talking about in John's community on Patreon is about using crypto to solve big questions.
Mm-hmm.
All kinds of questions that we're doing a terrible job of coordinating now, whether we're talking about here in the US or China or Europe, where we're not very good at answering some of the big questions. So John, I'd love to hear a bit more thoughts from you, flesh out that idea that we've discussed in your Patreon so much about what are some of the questions we're even asking about how crypto can solve questions.
Oh, wow. Yeah, I mean, new ways of forming companies. I worked on something called an open source venture back in 2010, trying to come up with, a software system that would look like a company and then operate largely autonomously. And that would allow people to do certain tasks online and then have those measured by the software and by ratings from others. And then they would pay them. And that they would get an annuity stream on that contribution, meaning that, as revenues came in from the company, that they would get paid multiple times for that hour of work they put in, depending on the, what kind of contribution they made over a long period of time. A good example was building a database of pictures with heavy duty meta content, meaning explaining exactly what this picture is, to have a picture of absolutely everything. Because the thinking was that if you build a big database of something that can be built from many parts, from something that everybody sees on any given day, everyone had cell phones at the time with picture capability, that you could grow this thing into a monster, kind of like a Wikipedia. If Wikipedia had this kind of model, it would be 10 times larger than it would be now, what is right now. But that this would then become valuable, and it would be valuable over time. And that, if we had a picture database like that, it would be used for AI training right now. But at the time, I mean, Bitcoin was just launching. It was $1. And people, there was really not much else other than just buying it and holding it and waiting for something to happen with that. So, that was too much of a burden. There was too much of a burden associated with getting people's minds around the idea of making money, working on a larger effort through online contributions. The whole Uber and everything else making money by working with an app was still out there, still out in the future. So it wasn't viable at the time. So there was like too many burdens. I mean, I ran into something similar back when we were doing RSS and the first kind of social networking systems back in 2001 through 3, is that there were too many concepts to get people to buy into in order to make it work. And that talking about networking and why you would post online would be like, people ran into immediate cognitive filters that they couldn't even see the value in doing it. So that's one thing we were working on and thinking about, and then we're thinking about other things associated with trying to build more political trust. And that, what's lacking as we start to move to a globalized, interconnected system is that the old sources of trust, like nationalism and the like, are in decline. And that's caused tribalism, and it caused all sorts of other less advantageous ways of organizing society. And there are methods for potentially building that trust back. For instance, using digital identity, digital rights, online identity, and data ownership. And those things could be transformative in rebuilding the trust. So I went on a little bit there, but it was just, a couple of different things that I've been involved in and that we're thinking about.
Well, it's a beautiful background. And Mike, I love your general approach that you shared with me about your attitude towards crypto, which is it's not everything that we need to use it to solve actual problems. There's a lot of fluff out there. So I wonder if you could share a bit about your experience and help people understand when I say you build cryptocurrencies. I think a lot of people does that mean he built Bitcoin? Well, it's not that. Can you help us just bring us up to speed? And what does it mean that you actually develop cryptocurrencies?
Sure. Well, to start with the problem frame, I think in my mind, you need to look at what crypto really is or how it's different to understand what problems it might be good for. And my cat's already poking his head in here. I think to me, it starts with some of the history even before Bitcoin, where it's the internet was designed as a decentralized protocol. And that was a revolutionary change, but it took a long time to really have people realize that and have all the effects known of what that was going to do. It sort of spurred a lot of the information should be free type of sentiment. But I think ultimately what came out of that, after the .com and the dot bust, was a lot of centralized platforms that had network effects that kind of took over. And I think it sort of changed a lot of the dynamics back to more of a centralized model. And to John's point, a lot of that has a lot of middlemen, a lot of, if you buy or sell something on something like eBay or Amazon, they're taking a big percentage of whatever you're selling. Apple App Store is the same way. There's all these middlemen that are kind of the gateways to be able to publish content or be able to buy and sell things. And I think that's somewhat contrary to the nature of what the internet is, just, how it's designed to work, because it is designed as kind of a peer-to-peer thing where there's no middleman and everyone can just communicate using these protocols. And I think when I really understood what Bitcoin and other cryptocurrencies were, it was kind of a similar protocol for the financial world. But now it's even more than just the financial world. I think it's with things like smart contracts, you can write applications or potentially even an entire company that would just run on a blockchain or run on the internet essentially and not require having these third parties. Because one of the big differences with cryptocurrencies, and Bitcoin is probably the best example, is that it removes the need for that trusted third party. In the traditional financial world, you need to have a bank, you need to have a brokerage, you need to have somebody who's making sure that the transaction finishes and that it follows all the rules. Whereas with Bitcoin, that just happens. You can't really have your transaction accepted unless it follows all the rules. And if it does follow the rules, it just goes through. And there are certain fees and things with it, with mining and stuff like that, but it's a lot less than what you see in the traditional financial world. And so I think in some ways it removes a lot of the friction, but it also, to John's point, allows you to maybe have more trust over the system, because you don't have to say, I'm handing over all my data or all my money or everything to someone else and just trusting that they're going to do the right thing with it all the time, and that they're even going to let me have access to it. I mean, we've seen countless examples now recently where people have said, I can't transfer my funds, or I can't even get my funds. I'm dealing with a situation with one of my clients right now where he's saying there was some due diligence thing that's, causing him to not be able to access his own money. And that just happens all the time, right? And it seems to be increasing with some of the things the government's doing now with monitoring transactions. And I have to imagine the reason they're monitoring the transactions is because they want to be able to have more control over that and be able to stop things that they don't agree with. Now, some of that, of course, is legitimate. You don't want to support things like terrorism or money laundering. I get that. But they're applying these things kind of universally and globally to everybody. And so it really is kind of a reduction in freedom. And it, I think, will erode trust even further. It's like, what's going to happen if the government is monitoring every single transaction in a bank? You're probably going to go back to a cash economy for a lot of things. I mean, it's not going to be that, people are just going to go along with it. They're going to try and find ways around it. And, I would also say, like, crypto isn't some thing for criminals like a lot of people seem to think it is. It's very transparent. You can see all the transactions. It's kind of like it's all public. I mean, if you're going to try and launder money, you'd be stupid to use cryptocurrency to do it, in my opinion, because it's like, it's out there forever. Someone can analyze it. And if there's just one little leak in information, they can connect everything back to everybody involved with it. And so it seems to me like it's the opposite of what people try and portray it as sometimes. But, to me, I think it is kind of that same decentralized model where you're saying we want to let people just interact with each other directly and not have to go through a third party. And I think we are moving in the direction, in my opinion, where you could have companies that would just be autonomous companies like what Rob described he was working on. I think that's what the DAO concept, which stands for Decentralized Autonomous Organization, is really all about, is being able to have a decentralized organization that nobody really owns. It's its own thing. And in Wyoming now, you can actually legally incorporate a DAO. And so we're moving in that direction. And I think it's still in the experimental stage. We've had a couple of misfires here and there too, with some of the early experiments with it, but that's how these things happen. There's always going to be some things along the way where we have to learn and grow and iterate and figure out how to do it right. But I certainly think that's the trend and that's the way we're moving. And so with that frame, I see this as solving a lot of potential problems, but it's certainly not every problem. It's for certain types of problems that would benefit from things like not having censorship, or not having to pay a huge fee to a third party, or not having to give all your data to a third party that might be selling it or giving it to someone you don't want them to give it to, or even denying you access to your own data. I mean, this is kind of a way of giving ownership of your data, which really money is kind of a form of data, back to the people that own it and want to use it. And it allows it to be more of just a free-flowing system of people can do what they want. They can control their own data. They can control their own information flow. And I personally think it's kind of inevitable that we're going to keep moving in that direction with this. And it probably will extend much more into the company frame and maybe even eventually into the government frame, although I tend to think that might be one of the last ones to go. So I've talked for a while. In terms of building cryptocurrencies, I guess just to briefly answer that, we do help clients. If you want a new cryptocurrency, we can create one. We've created some ourselves. I started out myself in crypto, kind of getting involved with an existing project right when it was about to launch. And that is sort of based on Bitcoin, but it has a lot of changes to it. And we also, our team is building graphene, which was really coded from the ground up by our team. So it's going to have sharding and smart contracts, a lot of the properties of what Ethereum 2.0 is trying to be, although it'll have a lot of other properties too, like it will have its own budget governance structure. The shard governance structure will be on chain, where you can basically, someone can submit a shard and say, I want to have a new blockchain that is following a specific protocol, and the community in Graphene can vote on that and say, do we want to bring this new shard type live? And then if the community wants it, it'll get added automatically. So I think those are going to be some of the unique characteristics that won't be part of Ethereum 2.0, because the Ethereum 2.0, I know Vitalik doesn't agree with on-chain governance. So, organizationally, I would say they're much more centralized, where everything's kind of controlled by the Ethereum Foundation.
I want to give a really Stone Age example of a problem and see if you guys could fix it with crypto, okay?
Sure.
Here's the problem. I live in a neighborhood. Sometimes we have aggressive dogs that people don't keep fenced. Okay, so it's not very often. And if it happens and the owner's there, I can go say, hey, neighbor, your dog almost just attacked me, okay? And what's the solution if you can't talk to the person? You call animal control. That is a solution that exists. One of the aggressive dogs in the neighborhood, thankfully not very aggressive, belongs to a cop. This dog is always unleashed, always not behind a fence. They just go in the neighborhood, digging people's yards, doing whatever they want to do. Who's going to call animal control on a cop? He's a nice guy as far as I know, but he's dangerous because he has the power of the state behind him. And so he just goes in people's yards and just wanders around. And we have a problem. We have a no rule for the cop, which if any of the rest of us did it, we would be penalized. How can crypto fix this?
Well, I think it wouldn't necessarily be my first choice as far as the type of problem I would go after, right. But I would say I could certainly think of some ideas. I mean, I think especially in the age of IoT, where there's a lot of sensors, there's a lot of cameras, there's a lot of things like that. I mean, one of the concepts that I think could be applied to crypto, which isn't really there now, is even some form of a social credit score type of system. Now, that seems like, that probably triggered a lot of people for me to even say that word. But I also think that is potentially to some extent inevitable that we're going to head in that direction. But I do think there's a good way of doing that as well, where that in itself could also be peer-to-peer and not controlled by some central authority that is saying, okay, we're just going to, you know, cut off people that do certain things. I mean, an example would be from the book Demon, or Damon, however you pronounce that, by Daniel Suarez, which is a book I love. And it's a little bit of a dystopian future, but it eventually has what I guess it would be termed a happy ending, where there is this sort of social credit score system, but at the same time, it's kind of like just everybody rates their interactions with everybody else. And so you would have a score like over your head in an augmented reality sense that would say, you know, have people generally had positive interactions with you, or have they mostly been negative? And so if we moved in that direction, which might mean we'd need to have some kind of augmented reality and all these sensors and things, but I do think that's a likely future. Then potentially every time this dog goes in someone's yard, it gets like a negative point, right? And at a certain point, maybe that negative thing exceeds some limit, and people say, okay, we can't allow that dog in this neighborhood. And it's more objective. You know, maybe there's footage that shows the dog was there. So it's not tied to any specific person. It's not tied to an interaction between the cop and the people in the neighborhood. It's very much, you know, there for people to verify, essentially. And it could also, of course, be logged on a blockchain. And so I think to an extent that type of problem could be handled by just saying, you know, as things happen, they're verified and people are accepting that this is really what happened. And then you can have rules over time that the society might agree on that says if your dog is unleashed and it exceeds a certain number of times, that it gets restrained somehow, or maybe eventually does get put down, just like they are now. If you have too many bites of neighbors that dogs are put down. I mean, you know, that's a horrible thing when it happens for the dog, but I understand why it's necessary too. So I think, you know, in some ways that could be a way of attacking that problem. Again, I wouldn't necessarily say let's go do it today. But I do think there is a potential path for that.
I love the explanation of how to take my very simple Stone Age problem and apply the new technology, as dangerous as it is to ever say those words, or as not quite dangerous, but silly, I guess, because of course, a decade or 2 decades from now, it'll feel sort of like smartphones are now. Like, well, that's not very new. Everyone has a smartphone. I want to hear John's thoughts on my simple problem.
Yeah, I'm a little hesitant on the social credit score, maybe for the very obvious reason, because that's being incorporated into a lot of the kind of authoritarian structures that are emerging in China and other places. It's a way of locking in a specific social model that gets very, very narrow and very orthodox.
And to be clear, I'm very against that part of social credit scores.
So you can flip it a little and go for kind of a digital rights kind of approach. And if you think in terms of digital rights, or, you know, data ownership or ownership over property enforced by data, is that if the dog is in your yard, you're looking for fees associated with that usage. And that if you had enough neighbors and you put pressure on, it's probably a small town, you put pressure on the mayor and others to kind of enforce this, everybody who's taking a picture of that dog doing something in their yard or traversing their yard or whatever could yield fees that then get charged against the cop. And then the cop's like, oh, Jesus, yeah, I'm accumulating money, losing money here. I'm going to keep that dog in my yard. We're going to keep him chained up, or he's going to bankrupt me. And it doesn't have to be a lot, but, you know, 20, 30 extra bucks a week can be significant.
Then we can have rules with a little bit of AI that says, if there exists a picture that is geotagged and it shows a dog that is not on a leash on what is identified as the street, we can blankly say that's always wrong. There's never a time at which that is socially acceptable. And then if we can get a bit fancier and analyze the aggression level of the dog, yeah, I've had dogs that were trying to go kill my dog and kill me a couple doors down. And if I could have a video of that then AI said, yes, we agree that this is a snarling dog that is coming at you and the owner has no control and it's in the street, there's no leash, etc. We meet all these criteria in some kind of fair way. Then at that point, it's not on me to try to say, well, do I speak up in the neighborhood Facebook group? Do I incur negative feelings from my neighbors as much? It's more like, well, this did happen and we have evidence, and it's sort of a different kind of morality, because right now it's based on who's popular a little bit.
Oh yeah, yeah. I mean, so the direction is either you use all this new surveillance technology and all this data gathering to kind of enforce more rules and kind of solve all the little problems, right? And because you have all this data to kind of prove that it happened, and you can, and then you can get into the other person's life to a high degree to kind of enforce certain changes in their behavior, or do you keep it on a decentralized level where it's more like, okay, you cost me. You cost me, an area that I own, or that that I have some rights over. That violation of rights is worth money. It's worth some, unless it goes to the point where it's actually criminal, to the extent that we have it today, where it's actually life and limb and actual damage. But those little costs can accumulate, and they should be, and that's a way of kind of just giving some resistance for people just to do whatever they want and just stomp on everybody. So I don't know, it's a kind of a different kind of approach to it. It's like, kind of rights enforcement and versus
we have a community park. So it could be if the system recognizes an authentic picture of your dog on the street without a human within 10 feet of it, then you get billed $5 that goes to maintain the park. So it's not as much you're a horrible person. It's just, hey, the system's just being fair, as long as the system's actually being fair, right?
Right. I mean, you could build these little transaction-based rules, and those can be enforceable in a decentralized way. Granted, it can get to people who are actually just playing all the rules all the time in order to make money, and that's a negative too. But that's an easier problem to solve than solving it, by getting a central authority or a group of people to kind of clamp down on individuals that they think are violating stuff.
Yeah, and I would build on that a little bit, just in terms of like, why is it different with crypto? And I think part of the thing is, number one, it is not a central authority that's judging everything, rather than having to go to a court to decide or something, that it could potentially just be, okay, these rules were triggered, so this payment gets made, or, something like that. And it doesn't necessarily require human judgment every step of the way, or some arbiter. Now, I would tend to think in most cases, if we were going to do this type of thing, you would want to have some kind of human appeals process, because there would be mistakes made for things like that. But I think you could probably handle the exceptions with appeals and say, if you don't agree with this, kind of just like a red light camera or a speed camera, you can appeal it if you don't agree that you were guilty of the thing, but otherwise you just pay the ticket, right? And so it would potentially be the same sort of thing where you would say, okay, yeah, I did break the rules, so I got to pay my fee. Or if I think this was not really my dog, let me, go through the appeals process and get it taken care of. But I think there probably would need to be human oversight at some point.
Yeah, the appeals process is key here, because that's what we don't have, like in social networking. If you're disconnected from Facebook, you don't know why, and they won't tell you why, and they won't. There's no appeal unless you're like a Silicon Valley insider. They can go, call these people on the back channel and get reconnected. So that appeals process works. It also works in a community setting. Most communities have some rule set that you sign into. At least, a lot of, you'd have it on a micro scale. Here's our rule set, and for how we produce power together, and how that the fees associated with that are divvied up. How much you get for producing extra power on a microgrid, for instance. To what you're allowed or not allowed to do on your property in that community, that you all agree upon in order to increase the value of that property. So putting a bunch of plastic stuff like pink flamingos all over your front yard when your neighbor's trying to sell their home is potentially one of those things that could be enforceable.
Yeah, so, and even the appeals process could be decentralized. I mean, one idea I've heard about that sort of thing, like a dispute resolution sort of thing, is you could say, okay, the facts get sent to a committee of people, they don't know each other, and they're all asked to vote on how to rule on this particular issue. And they may also put some stake in the game, like they're saying, I'm going to bet that this is the result. Based on the evidence, I think it's going to be this ruling, right? And so they have skin in the game to say, if I bet wrong, I lose something. And I think that in itself could potentially eliminate a lot of the corruption, right? Because if you're on a committee of 9 people or however many, and you decide I'm going to vote the wrong way because I like the cop, well, you're going to potentially lose money if everybody else votes the other way, right? And so you're much less likely to try and do the wrong thing because you're actually going to have a cost to yourself if you do that.
Right. It's like going back to, I think one of the more interesting things about the US versus everywhere else, it was like 1,000 different community experiments, going into the 20th century, all these different communities doing different things with very little centralized oversight. We didn't really have much of a central government until, the early 1900s. And they were all playing with different ways of actually making it through life and being productive and having cohesion. And so we're going to a certain extent, or we may be able to go back to a little bit of that kind of decentralized innovation and experimentation with how to make communities work. So it's just really a question of getting the tools that make that easier.
Are we going to be hurt in that because when most people think of the phrase crypto, they think of Bitcoin? Do we need a bunch of different underpinning techs here in order to enable that? Or is it possible to use just a handful of cryptocurrencies and support 1,000 different experiments?
Do you really need to? I mean, a good app that uses crypto on the back end of, whatever flavor you're using in the back end, shouldn't really matter what the back end is unless you trust it. But it's like, if it's a good app that does amazing things for you, should it really matter? Or?
I don't know. I'm just wondering it.
Because we were thinking, a lot of people think just currency, right? So but this is beyond currency. This is smart contracts. This is decentralized finance. This is a lot of more complex things that took years and years to kind of develop. One interesting thing about the crypto space that kind of dawned on me was that this is almost like the third way of decentralized exploration of a new technological area. We had open source, and then we had venture-backed models where we had companies coming in and exploring new applications of this new technology. And now we have this kind of crypto self-financing where people buy into the system, and then the system's value increases, which then finances the further exploration of the system. So you have this core tech that's trying to explore all the potential applications, all the kind of precursors to doing something interesting that have to be explored before you do something interesting, all done through this new method of financing.
Yeah, I mean, I think there is certainly room for multiple cryptocurrencies, just because when you design a cryptocurrency, you have to make certain trade-offs. And there's no way to design a cryptocurrency that I'm aware of where you can not make any trade-offs and optimize for everything. Right. So Bitcoin really is somewhat optimized for store of value and just transactions back and forth. And even that, I think, has changed somewhat over the course of its history. Like, I think if you look at Satoshi's writing, he was thinking more in terms of micropayments. But with the way the network's operating now, it's not really that suitable for micropayments, at least until you get to the layer 2 solutions that are being built on top of it. And so, Ethereum is kind of a different type of thing, given that it has this Turing complete, meaning it can run any kind of computer program on it, where you can have a lot more flexibility. Bitcoin does have its version of a smart contract language, but it's a lot more limited in the language of what it can do. So there's certain things you could program Bitcoin to do, but not as much flexibility as what you could do on something like Ethereum. And beyond that, I just think there are a number of different factors that would lead towards having other cryptocurrencies. I think one is just, I think there is, I believe, a demand or a market for just niche cryptocurrencies. You could have a local community currency. You could have one for a network of people that just want to transact within themselves, kind of like a barter system. You could have a token that is more not even really about money. It's more about status, or it's more about belonging to a group, or, NFTs right now is kind of one of the crazes. And it's like, that's not really money. It might be something that's an asset, like an artwork, but it also is potentially going to do a lot more than that, because that can be programmed too. It could give you access or privileges and all sorts of other things that is well beyond what it's doing right now. And then I also think another factor is what I see in the future is you're going to have government cryptocurrencies, you're going to have corporate cryptocurrencies, and you're going to have decentralized cryptocurrencies that's not really owned by anybody. And I think the government is going to eventually move towards these central bank digital currencies that they're already starting to move towards. And they'll probably try and push those out with regulations saying you must use this currency. corporations like Facebook with Libra and, the latest ones they're pushing, I think they're probably going to push theirs out with marketing saying, hey, this is the best one. You should use ours and look at what you can do on our platform with it. And they have such marketing reach that they'll probably get a lot of popularity, assuming they're able to get past the government that's been trying to stop them. And then, the decentralized ones would probably be more of a pull by people who say, I don't want that centralized control. I don't trust the government, or I don't trust these corporations. I'd rather have one that's just this protocol that nobody really owns or controls. And so I think it would be more of a demand pull as opposed to the supply push that would happen with the other two. But I really would expect that we'll see all three competing with each other. And I don't know if we can really predict which ones are going to win or how they're going to end up facing off against each other. But for a while, at least, I would expect to have those three kinds of cryptocurrencies. And then within each kind, you're going to have a whole bunch of them.
You're reminding me of Microsoft versus Apple versus Linux.
Mm-hmm.
They just has that vibe.
To an extent, although I guess there's no government necessarily in there, unless you want to call one of those companies the government.
The one all the government uses, maybe.
Yeah, but yeah, I mean, I do think that it's that kind of trichotomy. I don't know, but I just see those three as evolving and probably interacting with each other to some extent. I know the government is already starting to step in and try and regulate stable coins. And I'm guessing that at some point might even merge to some extent with the central bank digital currencies, since it's kind of a one-to-one relationship, but we'll have to see how all that plays out.
I have a question, kind of a DeFi question. What's the state of the art, for instance? And so I'm collecting a bunch of videos and people are, detailing how to make this and that object. And, I want to give them a piece of the action as this thing grows, right, early on. And I don't want to use a token just for, taking VC money and pour it into them as a marketing gimmick to get them to grow, like a lot of the VCs are using now. I want to have a kind of a transactional token that they can accumulate over time based on their use and the number of comments and citations and cross use you're getting on that platform. And that allows them to get a piece of that action as of the revenue associated with the company as it goes. As people buy premium products, they generate revenue on the system. Some portion of that will go to the people working on the premium access and running the core system. But, the user should get a piece of this. Or if somebody just wants to just buy these tokens on the side to kind of participate, but not actually do anything, how would I get a system that has a rise in value if it gets really hyped and popular very, very quickly? That could say it's worth 100 million or 200 million very, very quickly. All of a sudden that, those tokens get very attractive. It's something that more and more people will interact with and jump on. Is that possible now? I mean, I knew that, I looked at the old, financing laws back 10 years ago and checked in on them periodically. It used to be in finance a bit. How would that be done now? Or is it possible now?
Well, at least on my end, your video froze up at the beginning of what you were saying. So I'm not sure if I caught the whole thing.
Okay. Okay. So it's a it's a GitHub for manufacturing.
Mm-hmm.
Okay. And just an example, where people are putting in, how to make XYZ. There's lots of videos, lots of instructions, lots of CAD CAM. And so you have, a bunch of people putting in details that then can be cross-referenced. And there's lots of comment flow back and forth, lots of detail being accumulated in the system. And there's a transactional token for actually how that is given out depending on amount of cross flow and new participants and new contributors that you bring in. How could you make that and turn that into some kind of financialized instrument that allows them to participate in the increased value of the venture? Mm-hmm. That token translates into something that has, so say half the revenue of the company is allocated to rewarding those folks. And that there potentially is people who come in who want to buy tokens, just make a financial play mm-hmm. on it. How would you're involved in this right now?
Yeah,
I'm wondering where that would be.
I mean, some of that, it just sounds like the nature of how a lot of cryptocurrencies do work. to an extent, meaning,
Right.
if you buy a token, and a lot of people are just speculating, but then there are people who are participating in the network that get extra rewards. So even, using 4 as an example, you can stake it and then you get rewarded for staking, or you can run a masternode and you get masternode rewards. And so by serving the network and doing a job that the network needs, you get direct compensation in the form of new tokens that are generated by the blockchain. And there's also a budget for development for the project that is also generated on a monthly basis. It's also decentralized, so anyone can apply a proposal and say, I want to do this to increase the value of 4. And so the community would then vote on it and say, these are the proposals we like the best, up to whatever limit we have per month. And then that money gets paid out to whoever has the proposals that are the most popular within the community. And so I think that fits the model you're talking about to an extent. I think the part that might be a little different is the part about directly altering the nature of it or the size of it based on the level of participation. I mean, right now that would just be a function of increasing the price, right? Like the supply would just be what it was given all those reward structures I just mentioned. And then if there's more and more people using it and holding it, then the value would go up. But I think there certainly could be a mechanism where the more participation there is on the network, then you would potentially increase the supply more. You would say, okay, we're going to vary that. And graphene actually has some of those properties that it's going to do, where, as an example, like the key node that you would run if you were doing the equivalent of staking or masternodes on 4 would be called a validator. And when you pay a validator, it gets a certain amount for the job it's doing for a period of time. And if you add another validator, the way the algorithm would work is it almost doubles the amount that it's paying out. So if there's only a few validators, it's not really creating a lot of extra currency. But if there's more validators, it's going to increase the supply more. And if it fell off, it would create less. So there would be somewhat of a self-balancing thing where the inflation rate of the coin, if there is an inflation rate, because there would be deflationary pressures too. But if there was an inflation rate, it would go up more when there was lots and lots of activity and lots of new users and lots of people using the network. And if there was less activity, then it would naturally decrease the inflation rate, which might help kind of stabilize things over time. And I think that sort of concept could be applied in a lot of ways. I mean, in your example, it would probably be very different in terms of how would I measure use of IP and, what percentage of rewards should go to different participants and how do we measure contributions. But I think certainly the possibility is there. I'm not sure if I could point to a specific example of someone who's doing exactly that, but I think most of the examples I would think of would be more along the lines of you're doing a job for the network by either staking your tokens or by running a node or by doing some job for the network, and then you're getting compensated for that. Whereas what you're talking about might be more like I contribute something like a piece of intellectual property that then might have dividends over time that would need to be measured in terms of who's using that intellectual property. And so we would probably need to have some way of tagging a particular contribution saying that came from this person or this team or this group of people. And so they're going to get most of the rewards for that minus whatever might go to the platform and other things. I don't really see any barrier to doing that. It just would need to be designed well to make sure that everyone was happy with the protocol.
Yeah. So that sweat equity in terms of usage of the platform would actually be considered a form of mining, right?
Mm-hmm.
Right? It's the same kind of thing. So you classify it as the same thing. And that if you're doing work on the platform itself, like developing it, that's a different form of sweat equity. And then you have financial investors who are participating in this, who are just buying into the platform. It's always tricky with that financial investment stuff, because then you start to, how are you running? If you treat it more like a crypto investment, you can skirt a lot of this. But
yeah, right, and I do have some skepticism sometimes about projects where people are buying it without any intent of ever using it. Like there are just certain projects that are like that. I don't want to really name names, but just some projects where it's like, oh, I think this thing's going to the moon, so I'm going to go buy it. But really, when you look at what it's designed for, it's not designed for those people. It's designed for another audience. And they're just betting on the possibility that this other audience will have a lot of demand for this in the future. So I'm going to get in now so that they're going to have to buy it from me for a much higher price in the future. And, in some cases, maybe that will work out for them. In other cases, it might not. But it always gives me a little bit of a pause when I see that, because it's like, well, you're basically investing in something that isn't for you, you're never going to use it. So it really is just a pure speculative bet where you're saying, I think this will be valuable to somebody else. I suppose you could say the same thing about stocks to some extent, but I would still say even with stocks, in many cases, it might make more sense to invest in companies that you want to use yourself, or at least you understand the benefit they're providing. So I think there is an analogy there too.
Well, I mean, the beauty of having at least some external financial input is that it allows you to get liquid earlier, and a lot of people liquid, and then any participant could get a little taste of the liquidity over a long period of time. If you kind of eke it out, kind of like options, it's like, but perpetual as you're participating in the system. So, okay, so down to the nitty gritty. I mean, okay, so we have graphene as it was competing with Ethereum, but it takes a different approach. I guess they're using as C++ still as a kind of the.
It's written mostly in Go. There's certain pieces that are in Rust, and there's actually some components that were optimized into assembly code, but mostly it's written in Go. Okay,
great. And so what would be kind of like the startup costs, kind of the nitty gritty details about doing something like that? I mean, assuming that the whole site's being developed and it's got a team working on that, how would it integrate something like this in terms of it has a method and it's thought out a way of allocating sweat equity internally. So, how would it, what would it cost to actually set up something like this?
Well, I think the scenario you outlined would probably involve some kind of token that would be specific to its use case, whatever it was. And so it would be a lot like what people do on Ethereum and Binance Smart Chain today, where you would mint a token, issue it by whatever rules. You'd have to write all the smart contracts to be able to outline what those rules are and how they should work. And then you would need to have the dApps, the ways for people to interface with it, so they could say, here's how I actually make a contribution or register my contribution, or however that would be, kind of like a patent office sort of function, where you'd say, okay, I contributed this thing to this project and I'm going to register that this is my thing. And so I would think those are the types of things you would have to do, is number one, just design the protocol to do everything you want it to do, but then to code it essentially in a set of smart contracts around a token, where you would say, these are the rules on how we issue tokens. These are the rules on how they're paid out to people. So I think that would essentially be the primary cost of doing something like that, is just designing and creating the token and all the smart contracts that would enforce those rules.
Right. And then conceivably, I guess payments would be from the system, say it's generating revenue, would have to be then transferred out of that company into some kind of, liquid cryptocurrency, and then it would show up in the wallet of the user. So every user would have to have a wallet that it could be distributed through, and that would be probably a general purpose wallet with most of these, like Coinbase or whatever it's like.
Yeah, I think so. I mean, it's in one sense, depending on the system, there may be a value of that token native to that niche. Like if you're involved in this ecosystem, maybe you just use that token as a native thing to trade back and forth within that system. But in other cases, if it really is more of an external value that you're looking for, then yes, you would need some way of translating that into something that is more liquid. I mean, and if depending on the situation, I might even say maybe rather than using a token, you might even just use a stable coin or some other cryptocurrency that is liquid already.
Oh yeah, better.
And then, you don't have that issue of trying to translate it. You would still have to have some way of recognizing the value in that case, though, because if you did use an existing cryptocurrency, then you don't necessarily have the ability to just mint more of it. So you need some way of saying, how did we create value? How is that value recognized? And I think that might be the challenge with some of these tokens, is to say, what is the inherent value of these things? How do I measure the value of a new token that's specific to this manufacturing project relative to $1 or relative to Bitcoin? That there would need to be some way of using the token, I would tend to think, rather than just having an infinite supply created. You would need either some way of saying, I'm going to burn this token to get the $1, or even something internal to the system to say, when you get a token, there's some way that it's used, right?
Right.
As opposed to just having a number out there that says I did something.
Right. And so the sweat equity could be kind of allocated to kind of like an inflation of the system. And then there would have to be an internal market to kind of give a pricing. So external investors, if they did buy in, would be able to, drive that total valuation of the effort, basically total valuation of the venture.
Mm-hmm.
And I guess that could be paid out directly through a stable coin, a wallet that accepts that, and that. But there have to be an internal marketing mechanism. Is there any off-the-shelf kind of systems for that to run something like that?
Yeah, well, I mean, I think if you look at the current state of all the DeFi tokens and things that are around, it generally uses what these DEXs, the decentralized exchanges, which is things like Uniswap or SushiSwap, or on the Binance Smart Chain, it's PancakeSwap, and those sorts of mechanisms offer an automated market making mechanism where you give incentives there too for people to be the market makers and to provide that liquidity. And so you would say, for example, if I think this new token is worth $1, then you would put up an equivalent amount of that token and the same dollar amount of whatever the base currency is. So BNB in the case of Binance Smart Chain, or Ethereum in the case of Ethereum, or maybe Bitcoin if it's on the exchange as well as a trading pair. And you would say, okay, I'm going to put in the same amount of these two currencies, and then as people trade, I get a little bit of a commission on the trade, but I'm basically making it very liquid, where instead of on a traditional, more centralized exchange where you have to have someone else taking the other side of the order, it actually automates that, and it has an algorithm for determining how the price should move. So if there's a lot more demand, it pushes up the price. If there's a lot more supply, it pushes down the price. And it has an algorithmic way of making sure that it is liquid, at least to an extent. And so I think that mechanism would at least help with that part of the problem.
Okay, so you could just you force the liquidity. So you have to make that initial investment in order to get this thing started, and then it makes it easier for people just to come in and buy. Or
yeah, I mean, right. The way these DEXs work is when you list a token, you basically say, here's the initial price, and I'm going to put an equal amount of two different things for this trading pair. And then from that point on, it automatically adjusts as other people put in liquidity or as other people do trades. And so if you end up with a lot more supply on one side, it'll basically push the price up to equal it out. And
right.
There's different algorithms for these different things. They're not all the same, but that's the general mechanism that they came up with, that they call automated market making, to be sort of a way of providing liquidity where you're not really having an order book and you're not really trading directly with another person. It's more like these market makers are providing liquidity. They're getting compensated in the form of this trading commission for providing the liquidity, but they're also taking some risk along with that, because if it gets really imbalanced, they could have what you call impermanent loss and end up losing, if they end up on the wrong side of the trade. So there is a dynamic there as well. But I do think that's one of the more innovative things that the DeFi space came up with, to say, rather than having an order book where you have to just make sure people are putting in orders and having basically people act as market makers, it's came up with more of an algorithmic way of solving the same problem.
Right. So you could basically apply this solution to like a large community microgrid, where people are producing excess solar energy and storing it and delivering it at different times, and you could have it financed this way. With the sweat equity of actually energy instead of.
And I think that might be an easier example, because there is essentially a real asset behind the token, right? Like when you produce a certain amount of energy, you could say you mint a token that represents that energy, and then when someone else consumes the energy, you burn the token. So there's an automatic mechanism of making sure there's kind of equilibrium of the supply, but at the same time, the people that are using more would end up paying, and the people who are producing more would end up getting extra. So it would be able to have its own essentially internal economy where you're doing energy trading using this token.
Right. Brian was wondering about creator coins. So we see the Substack, we see the Patreon, we see all these other people who are just creating, trying to figure out how to actually turn that into something that's tokenized. That if people needed a conversation with that person, they could bid on it potentially and generate a slot to have the conversation, like a either consulting or in public, or a conversation between people.
Yeah, I think there's definitely potential for that. I mean, I think the BitCloud is one example of that, where they have creator coins and people will buy them and be kind of invested in that person. I think there's a lot of interesting properties that come with that. I think Balaji Srinivasan has talked about this, where if you buy someone's creator token on BitCloud, it means you're probably aligned with them and agree with them in whatever way that caused you to buy the token. And so if that person got attacked online, you might be more likely to defend them because you've invested in them. You know, you care about the value of your token to some extent. But in your sense, I think it is a little different, where it's more like you might have it as a sort of, again, like a barter currency sort of thing, where you'd say you can buy tokens, and then whether it is through an auction or just even a fixed price, you can say, okay, I'm going to give an hour of my time, and this is the price in that coin. So someone has to pay that based on that creator coin. And I think, that would, I don't know how different that would be than just putting a price on it or having an auction in dollars. But I think to an extent, it might generate some investment in you, if you're the creator, because that you might say, well, if I think the value of this token is going to go up, then maybe I'll buy it now while it's cheap. And I think it's later, it'll be worth a lot more because it might be able to buy that time for a much cheaper price, essentially, or less coins than what it would cost today, right? And so I think it would potentially, again, give you that initial investment, get the value started, and also just help grow your community to the point where you do have this invested sense of following. And I think that, to me, that's where a lot of the potential is that it's beyond just following somebody. On social media, it's one thing to just click follow and say, I'm going to listen to what you have to say. And even something like Substack, if you're subscribing, okay, I'm paying a certain number of dollars per month potentially on something like Substack or Locals or something like that to have access to that information. But it's still kind of transactional, right? Once I spent it, it's gone. I don't really have anything but sunk costs at any given point in time. But I think if you had this investment mechanism with more of a token, it's more like I'm buying a token, but I actually have that token still, and it's worth something by whatever mechanism it makes it worth something. And so you're more invested in that now, right? You're not just a follower. You're an active participant, and you may be wanting to grow the community or make the community better so that the community coin, if it is more of a community-based thing, would be worth more to everybody. And so you align these incentives of the group, and it becomes more like a tribe or an aligned network, as opposed to just people following your creator. And I think that has a lot of potential.
Using creator coins to vote is really interesting. When I think about what should I talk about next, or even what should I research, or for both of you guys, of all the things, if you were to say, here's 3 things I'm thinking about looking into for a month, which 3 should I do? And you let everyone who has X amount or more of your coin vote. Now we get interesting. I want to add some numbers to this from BitCloud. John Lee Dumas, podcaster, his total, he's at a $500 coin price. About $20,000 have been staked there. We have Scott Adams. He's at a $3,000 coin price with $270,000 market cap. And then Balaji is at $12,000 coin price, and he's at 2.26 million market cap. So it adds flavor to what follower counts we might see on Twitter or somewhere else in terms of how much do people actually believe. And then also over time, as more people buy the coin, what do people actually believe about how valuable this person is? Instead of saying, well, you have over 100,000 Twitter followers, I'm going to listen to you, it might be, well, you have X amount within whatever ecosystem we're talking about. I'm going to take that person's perspective as more valuable for somebody else.
Do they actually get a piece? Like, does Balaji get a piece of that?
I don't remember.
Yeah.
Or is it totally separate?
I think they do. They get a piece of it. They don't get all of it, but they get a piece of it. I'm not sure exactly what the split is, and I'm sure the people who created BitCloud are, collecting a lot of it. But from what I understand, if you are a creator and you kind of claim your token, because one of the things I thought was kind of controversial was when BitCloud launched, they just created a bunch of these creator tokens for people. Like they just said, here's all the famous celebrities. Let's just make tokens for them,
right,
and then allow them to come claim them, and we can verify who they are and all that. But they didn't ask these people; they just kind of created these things and
using their name and. You're right. They don't have to pay them or even interact with them until
they're waiting. So whenever Elon Musk or whoever's not verified yet signs up, they instantly have something there. So it's sort of a bait. The more powerful someone gets to attract them to pay attention to BitClout.
Is it transact? So is it probably transaction based?
I think, as I recall, at least at the time of launch, which is when I looked at it first, you buy them with Bitcoin. I don't think the Bitcoin ever comes back,
Right.
but some portion of it is reserved for the creator. So if they claim their token, then they get that portion of it, and then BitClout probably keeps the rest of it. But I think they're also, at this point, the latest I heard is they're trying to turn it into more of a social network. So it's meant to be, a competitor to some of these other networks as well, where, again, you would be invested in the people you're following as opposed to just saying, I want to follow this person, or I want to pay $7 a month to follow this person.
And that's just where Let's Go Finance went to, is they've released the blog functionality. So if you own someone's creator coin, then you can access their blog, but not otherwise. So it's, in the case of Let's Go Finance, it's you still own the cryptocurrency, is what they say, and so you can move in and out. But by giving your interest on your cryptocurrency to the creator, then you have access to the creator's private stuff. Mm-hmm. It's so new, it's hard to tell, and especially me as a non-expert. There's 1,000 crypto projects. Some of them, I know, looking backwards, will be smoke and mirrors, complete vaporware nonsense. And some of them will actually be in common use 2 years from now, 6 months from now. And I don't understand, as a non-expert, how to evaluate the incredible number of opportunities, many of which are just they don't actually exist. What thoughts do you guys have for wrapping up here as how can non-experts properly evaluate anything we've just talked about?
Well, I mean, I think at the end of the day, it is just supply and demand, right? So it's hard to say exactly how things are going to play out because people value things differently for lots of different reasons. But I think as I look at specifically social media types of things, what's interesting to me is more of a decentralized model for that. Because I think, if it is just another social media network that's controlled by a platform, then I'm not sure how revolutionary that would really be, just because it's based around a cryptocurrency. Because Twitter or Facebook could just say, now we support cryptocurrency, and I think some of them are already moving in that direction. So it's like, that to me isn't necessarily a revolutionary innovation. I think, to me, the revolutionary innovation would be nobody controls your posts. You still own your posts, and no one can take them down. And you might even control access to who can see your posts. And so if it really was more of a true peer-to-peer model, like if you could imagine Twitter, where there is no Twitter, it's just people are tweeting and they can see each other's tweets, but you still own your own tweets, and that's more of your thing. I would think that might be a very interesting model, and I don't know how many projects are exactly in that direction. I think there are some that are trying and experimenting with those sorts of things. I don't have any specific examples or names to give, but to me, that seems like it has the potential to be more revolutionary. I don't really trust Twitter to make their own decentralized one, which is they say they're working on, but they've been saying that for years. And even if they do come through with something, I'm guessing they're still going to have some kind of control over it. So I would prefer to see it be more of a true decentralized model. And to me, that would be more of an interesting concept. And some of the things I'm talking about and thinking about doing with 4 are along those lines. I'm still really at the early stages of kind of setting the vision for that. But I do think there's a market for it, and it might be more of a community-based thing. So as opposed to just being a global social network, it would be like, for a particular community, you could have your own network, and everyone kind of owns their own data, and it might have something like this creator coin concept to it, but it might also be a little more of an emergent phenomenon as opposed to something where you create a community. It might be more like you just post things, and as people recognize they like you and they follow you, then you kind of emerge as a leader, and you would be able to kind of form a organic community that way, as opposed to saying, I'm going to start this thing and try and get people to join it. It's more like people would just join things, and you'd recognize that person's a leader as a result of them having valuable things to say or valuable contributions in whatever way that community is moving.
Yeah, I'm not sure about a new social network. I mean, along the lines of what we already had, emerging. It's more like getting control of the data. I testified in front of Congress a couple of weeks ago on this, and it was presented the idea of data ownership as a kind of an alternative. It's like they really hadn't even heard of it. It was like at least tossed out, is that we could aggregate the data from all these platforms into a repository that you control and I control, and our data can be pooled there, and that we have data brokers representing us. And then we have those data brokers, or those the people providing those repositories can provide us the tools to set the privacy limits that we want in the different platforms, because the different platforms won't write those tools, or they won't give us those tools for managing it. But it's going to have to be externally kind of forced on them, and that it would unlock that data for use in building all sorts of other new machine learning, deep AIs, and a whole variety of different things. So it was just getting that data ownership was the key here. Probably the next big wave, I think, is on par with what we saw with social networking, is probably the AR stuff, which is adding digital objects to the environment. And my worry is that it's going to be locked down like it was with the smartphone and the smartphone stores, and about what's appropriate, what's not, what you can do with how, if somebody wants to say, this is the way I want to be represented, modified, that you have to see them that way. You can't change it. You don't have any control, or these objects are fixed in the environment and they can't be changed. That kind of thing is, I'd rather see more of an open source alternative developed, where there's, like you see in the gaming community, where mods just produce thousands a day. It's like they're by people who are doing all sorts of innovative stuff that can't be done if there's a 30% charge on everything, for every transaction, or some kind of upfront fee, or there's limits, like AI enforced limits by the big platforms that say you can't do anything. So it's getting in front of this stuff, because when we did the initial social network and we tried a decentralized model, we did Radio Userland, which was like, okay, it's a blog producing tool that sat on your desktop, and we did RSS and did open sourced it, and we got the New York Times and everyone else signing on, and we were able to get millions of people using RSS with their blogs, and the feeds that you got looked exactly like Twitter, with the shortened RSS string, and then when you posted it back, it looked like Facebook. So even the look and feel of the blog was like Facebook. So but this was like 2-3 years ahead. But the thing is, the centralized model didn't allow us to aggregate all the data. It didn't allow us to offer that kind of real-time updates that Twitter did. And it was just before JavaScript really took hold. So we weren't able to. We thought we were ahead, but anyway, the centralized model had so much more money-making capacity.
Mm-hmm. Yeah, I mean, I think I'm certainly aligned with the data ownership concepts. I think that is important, and I think we should have more rights over our own data, because it just seems like the way things have gone, especially with the social media platforms, at least, is that it's kind of like you're just giving all your data to them, and it's whatever the terms and conditions say, which is pretty much all in their favor. and so I certainly would like to see something where you can say, I want to post something, but I don't want to lose ownership of it, and I don't want to be subject to somebody else's terms and conditions. Maybe I want to set my own terms and conditions, and anybody can decide if they want to include my post or not, if they don't agree with my terms and conditions, but it's still on my terms as opposed to somebody else's. And when I have thought about augmented reality, I did kind of think it would be interesting to say, what if you could represent yourself looking one way with an avatar or something, but I might choose to represent you a completely different way. So the way you think you're displaying yourself might not be the way I see you. Maybe I come up with some way of making everyone look like a robot, and you come up with making everyone look like an anime character, and everyone could kind of choose their own reality. I don't know if that would be a good thing or not, because you might end up with all these disconnected realities.
Oh, I think that's going to immediately, people will immediately enforce how they are. They will be able to enforce how they're perceived. That's going to be one of the first laws that are,
Mm-hmm.
See, so many of these restrictions are coming on the corporate side, right? I mean, they're moving far faster than the government can, because the government's limited by the kind of right structure and constitutional limitations on what they can do. And the corporations aren't limited by any of that. It's free and open. We don't have any rights against corporations. They just go, 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 go. But when they get to a monopoly level, you can't live without them. So it's like, then you're stuck. And we get farmed for the data, just like in feudalism. So I guess we ran out of time. And thanks, Mike, for jumping on board with us. And,
glad to join.
Yeah.
Love to do it again.
Yep, me too.
So before we wrap up here, for each of you guys, where can people follow you, find out more about the projects we've been talking about today?
Well, most of my links and communities you can reach at for.io, which is phore.io. And the other one would be getgraphene.io. So get and then GRAPHENE. So those two websites would probably get you most of the way to finding me.
And John, for folks not familiar with your work, where's the best place?
Yeah, the Global Gorillas Report. It's just a monthly report looking at big issues and structuring them in a way that makes sense for decision makers and people want to make sense of what's going on.
Great.
That's it.
Wonderful talking to you guys, and I'll see you all in the next live stream.
Right.